The short-term interest rates, the federal funds rate, of course, is managed by the Fed, and that is going to go down further. I think, by the way, Jerome Powell didn't say very much, not because he became a better speaker than he was on July 31st. It's kind of hard to believe that he has changed. What has changed is that he had so much dissent, as Steve pointed out. He just did not carry the Fed with him. He had to make a statement which was right in the middle of the road, which essentially meant nothing, and he was not able to say much.
Because he doesn't know which way the economy may go, and he doesn't know which way the Fed, his fellow members of the FOMC, may go, right?
I think the first one has been clear for a while, that they do not know which way the economy is going. Remember that late last year, we were supposed to be far from the neutral rate, far below it, so we are going to increase rates several times in 2019.
To get there.
To get there. And then 2019 came, and now we are said to be very close to it. If you had any idea where the economy was headed, you wouldn't have made that statement. The other part of your question, Tyler, is what is happening to the long-term interest rate, the 10-year, the 30-year. They are not dependent on the Fed at all. They are based on your expectation for real growth and what you think is going to happen to inflation. And we just saw how vulnerable we are on the trade side just in the last several minutes. I think there is going to be more happening before the November 2020 elections. You're not going to have any resolution. And I am, in fact, looking for a recession by about mid-2020. When you put it together, 1% seems, if anything, an optimistically high level for a 10-year yield, but I don't want to go down below that as of yet.
So the consumer turns between now and mid-2020?
Consumer turns.
Because they would have to, right?
They have to, Melissa. You're absolutely right. And if you look at the 2001 recession, March to November, and the 2007-2009 recession, in both cases, the consumer sentiment started dropping several months before consumer spending did. And consumer spending is not a leading indicator. It's either a coincident or a lagging indicator, which means that that often happens when the recession has set. Only after that does the consumer spending start to drop. And I think this time is going to be no different.